apparently I'm not the only one that's talking about this. Remember this video? I'm sorry. I'm sorry that I told my clients over the past 22 years that if they made one extra mortgage payment a year, that they would pay their mortgage off 7.5 years faster. I'm sorry for that, because that's truly not the best strategy. The reason that's not the best strategy is when you make that extra payment, you're losing that money. That you don't have any access to it. That money. Hey, I did that video about a month ago talking about how making extra payments is not even worth it. Take a look at my buddy Sean. Talk about the same thing.
You think paying an extra $100 a month or making bi-weekly payments is going to change your life? It really won't. Let's talk about what actually will. I just showed a client how to cut off 18 years of their mortgage payment and $291,000 of interest. No budgeting, no sacrifices, no making extra payments. One good strategy called a First-Lien HELOC. Instead of throwing pennies at your mortgage to try to pay it off sooner, we flipped the entire mortgage system on its head using this strategy to pay your home off in years rather than decades. Here's our current loan breakdown. They owe $525,000 on their home. It's worth $650,000. Current interest rate's 5.75. They've been in this mortgage now for 2 years. Average net deposit they make into the HELOC every single month is about $14,000. They've got about an extra $4,000 that's in a savings account that they're going to reallocate towards our HELOC. Now remember, with the HELOC, you have access to your line of credit for 30 years. So just because we're putting more money into the HELOC doesn't mean that we can't take the money back out. You still have access to all of this liquidity. So for most people that are using this strategy, you're actually creating more available capital that you have access to. Now, what you decide to do with that, you have to be smart with, because we don't want to use the money just for the sake of spending and buying cars and all the other stupid stuff that we tend to buy. And because our HELOC comes with a checking account, again, we've got our $14,000 deposit that's being made every single month. And at the end of the month, this couple has about $3,500 left over after all bills and expenses are covered. So if they stay in their current mortgage, they would have 28 years left on the loan. Total payback, principal and interest takes us about to $1 million. Refinancing them into our product, we're going to pay that loan off in 9.7 years, 116 months, saving them $291,000 in interest. The average interest rate on this mortgage, 8.3%. But because we pay interest on an average daily basis, we are only paying $241,000 over this 9.7 years. That gives us an effective interest rate of 2.69% on this mortgage, substantially lower than where they are today. Stop being loyal to a broken mortgage banking system. Start thinking outside the box and take some power back so you can beat the bank at their own game. And if you want to learn how to do this, comment below and I will help you out. And I will personally hop on Zoom to show you how to beat the bank and get yourself out of mortgage debt faster.
So as you can see, making extra payments is not the best way. Basically reallocating your money into a first lien HELOC that has a checking account attached to it that gets applied to your mortgage balance daily is much better than making an extra payment, because you still have access to all those funds, saving a significant amount of interest, and it's also paying your loan off faster. And did I mention you have a line of credit for 30 years that you can do whatever you want? So you might as well beat the bank and be the bank. Like, follow, and share if this makes sense. And I can show you how this can work for you. Or we can just jump on a Zoom call, run your numbers so you can see how this works for you.